Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Twilio, ticker symbol TWLO. So Twilio is a technology company, currently priced at $209 per share. Past Friday, yesterday, it shot up 7.54%. Past year, up 53.21%. It surged ever since end of April. In the past 5 years, up 771%. And IPO'd around July 2016. So Twilio, as I mentioned, is a technology company. They develop communication software, cloud-based platform and services, and the platform consists of different layers: engagement cloud, programmable communication cloud, and super network. So they all have a lot of APIs you can use to communicate on your platform. So market cap is $29 billion. P ratio does not exist, which means they're not profitable at the moment, and dividend is 0, which means they're reinvesting all profits back into growth. Scrolling down a bit, you can see that analyst ratings out of 27, 74% give it a buy, 20% give it a hold, and 0% give it a sell. Scrolling down a bit more, in terms of earnings, Q1 2020, which is this past quarter, it beat expectations by a lot. Versus previous quarters, it just barely beats it, but this time it beat it by a lot. Initially, it was going to report negative 11 cents, but it ended up reporting 7 cents earnings per share. Going up a bit, taking a look at the slide deck that was reported on May 6th. So taking a look at the financial overview, some of the highlights. So as I mentioned, this is a high growth stock, up 57% year over year. The first quarter revenue was $364.9 million. The net expansion of 143%, more than 190,000 active customer accounts, which is huge, and they continue to grow. Q2 guidance is also very positive, so they anticipate 33 to 35% year over year total revenue growth. In terms of GAAP loss from operations, 20 million to 15 million, as well as non-GAAP loss per share, 11 to 8 cents. So overall, this is a very high-flying growth stock, but not profitable. Scrolling down a bit more, you can see that, as I mentioned, growth year over year, 57%. In terms of total revenue growth year over year, organic, 48% year over year. So you can see this trend of upwards, and year over year, it's 57%, which is solid. Now calculating US total revenue, dollar-based net expansion, you can see it's 143% for Q1 2020. Now the top 10 customer accounts, we want this to be lower because otherwise it would be very centralized on these top 10 accounts. So Q1 20, you can see it's 15%, up a little bit from last quarter, but year over year, it's actually about the same, 14 to 15%. But it's it's gradually decreasing ever since 2018. Yeah, and we want this number to be lower just so it's more diversified across its accounts. Now, in terms of geographic revenue mix, you could see that last quarter or this past quarter was 28% international revenue. It's fairly consistent year over year, 24%, 29%, 28%. So most of its customers are US based, but 28% is international. That's all in terms of the Twilio presentation. Overall, it's a very high-flying, solid growth stock. Not profitable. They don't pay dividends either. I don't plan to start a position in this. I plan plan to continue following it. I think it's a very interesting stock to follow because, especially during these times, many people want to communicate online, and it's one of those on my watch list, and will continue to follow in the long term. That's all for this video. What are your thoughts on Twilio? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.